All right, April, we've got everyone.
All right. I would like to welcome everyone to our December 17th Board of Trustees meeting. It is now 6:30 my time, so let's call the meeting to order. Do we have anything to add to our agenda?
I do. I'll add technical support under new business. And then we'll also, after the approval of the minutes, go ahead and let Jared present the audit. That way he doesn't have to stay for the entire meeting.
Okay. All right. Do we have a motion to approve the minutes of the November 19th, 2020 board meeting?
I approve them.
Okay. Do we have a second?
Second.
All those in favor say aye.
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 All right. The minutes are approved as written. All right. We will go ahead and allow Jarrett to present for us now at this time, please.
I think everyone has a copy. We emailed it over to Melissa today, and I guess it got out to the board, a copy of the audit report. We'll flip over to the third page if you printed it out, or the third page if you have it electronically. That's our auditor's report. We issued an unmodified opinion, which is a clean opinion. That's the opinion you kind of hope you get when you start the audit process. It means your financial statements are presented fairly in accordance with generally accepted accounting principles. On the second page of the report, we just talk about some other matters, some required schedules that we'll talk about a little bit later in the back relating to your pension liability and your other post-employment benefits liability. And the last part there just talks about you guys being subject to government auditing standards. The next 4 pages is the management discussion and analysis. This was put together by the library staff, by Melissa and the staff there. It has a lot of narrative information, is what I'd like to call it, about the financial statements. It also has some stuff, some budgetary highlights. It has some what your plans are for the next year, as best as you can tell them. I guess with this year going on, you don't really know what the next year is going to be. I certainly don't. But we didn't prepare this. We did make sure the numbers, like on page 4 and 5, match to the financial statements. But this is all internally prepared. But like I said, we did make sure that it all matched. So I'm going to skip past that and go on over to the starting the financial statements on page 7. You have there, we have your statement of net position and governmental fund balance sheet. So the governmental fund balance sheet is the first column, and that is looking at everything on the current, in like a current time frame. So basically, it's only looking at what's really available for in the next 60 days in the current year. So you have there current assets or total assets of $1,543,000. It's It's made up mostly of cash and investments. That's that's a little over $1.5 million. You have liabilities, which are your accounts payable of 7275, and you have total fund balances of $1.563 million, which are, they're your unassigned and your unspendable fund balances. In your next column, we have your adjustments. These are the adjustments which are talked about in note 1, are to bring in all your long-term items like your long-term liabilities, your fixed assets, and that sort of thing. So you can see there in your adjustments, we added in $3.2 million in long-term assets, which are mostly your depreciable assets like your building and your books and your furniture and fixtures and that sort of stuff. We also have in there your non-depreciable assets, which are like land and that sort of thing. You have your bond discount. We also added back in your deferred outflows, which are related to your pension and OPEB. Those are a total of 281. So your total adjustments for your assets were $3.5 million. We add that to your current assets to get your total assets for the government-wide financial statements of $5.1 million. The same thing down there on the liabilities. So we added liabilities of, excuse me, of a little over $3 million. That's mostly related to 3 items: your long-term debt, which is around $2.1 million, and then your pension and your OPEB liabilities, which are about $900,000 roughly. So that makes up the most of the adjustment there. It's almost $3 million total. That gets you down to total liabilities of $3,076,000. You have deferred inflows related to your pension and your OPEB, which are $89,424. And then we have your net assets in there at the bottom, or your net position, excuse me, of $1.9 million to get you down to $5,126,790. The next page is your statement of activities and then your governmental fund balance. So the governmental income statement there is the first column. That is again, the same thing. It's kind of, think of it as like a cash basis income statement. Anything you spent is an expense. Anything you brought in was a revenue. So it starts off with your expenses at the top. You have your program expenses like personnel, library materials, your processing and program supplies. You have your operating expenses. Down there at the bottom, you have your capital outlay. So you bought some equipment or different furniture and fixtures throughout the year. On the government-wide statements, we're going to depreciate those, but because it was a cash outflow, it's treated as an expense here. We also have your debt service, which was a total of $148,000 roughly. The principal payments there are treated as an expense again because they're a cash outflow. So you have total expenditures of $879,000. Your program revenues were about $18,000, and then your general revenues were $853,000, which leaves you with change in fund balance of a decrease of $78.71. We add that to your beginning of year fund balance to get your end of year fund balance. We have some adjustments in there, which are, basically going to the accrual basis. Your adjustments in personnel are what's related to the pension items for being long-term. Your library materials are taken out because we capitalize those changes and we kind of roll your library as one of your fixed, your books and stuff are one of your fixed assets. We have to add back depreciation expense, take away your capital outlays, and then we don't treat principal payments on a note as an expense in the government-wide statements because we're doing everything full accrual. So that's really just a payment of a liability. That gives you total expenses in the government-wide statements of $1,043,000. You have the change charges for services, so you add those to that to get a net program expense of $1,025,000. We add to that your general revenues of $853 to get you a decrease for the government-wide, full accrual financial statements of $171,000. So we add that to your beginning of year net position to get your end of year net position. The next page starts your summary of significant accounting policies. These are pretty boilerplate from year to year unless there's a lot of policy changes, which you guys didn't have. And honestly, most companies, governments, whatever, don't really change accounting policies every year. So it's pretty boilerplate. You have your reporting entity, talks about your basis of presentation, your basis of accounting, what you treat as cash and cash equivalents. It talks about your budgetary process there at the bottom of page 9. Top of page 10 starts talking about receivables. We talk about your property and equipment. We list out there your depreciation expense for the year was $182,551. We talk about your different fund balances, your use of estimates, which are at the bottom of the page there. And at the top of page 11, we just have one more paragraph in note 1, which is about your retirement plan. Just the fact that you guys participate in CERS. Note 2 is a note on your concentration of credit risk. All of your cash and cash equivalents are in either FDIC secured insured accounts, which is the 492, that's category 1, or they are insured by pledged securities by the financial institution. So you have no unsecured or uncollateralized cash. Note 3 is a general note on, there's your note on investments. You guys have, GASB requires you to treat certificates of deposit as investments. So that's what your investments are. They're really just cash. They're just held in an account that GASB doesn't consider to be cash. So that's what we're talking about here. At the end of the year, you had $841,000, $841,201 in certificates of deposit. Those are under level 2 inputs, and that's because they're not traded on the open market. So they're just, they don't have, that's why they're under level 2. It has nothing really obviously to do with their risk or anything like that. It's just how they're valued. Note 4 is on capital assets. It's just really a reconciliation from the beginning of the year to the end of the year. Note 5 talks about compensated absences and lists the amount of the liability you guys have at June 30th, which was $38,459. Note 6 is a note on your bond. Talks about, it shows the amount of principal and interest that's due over the next 5 years. And then after that, it shows it in 5-year increments, what's due. Note 7 is a note on long-term liabilities, which this has all the long-term liabilities in there. Excuse me, and it reconciles the beginning of the year to the end of the year, so it shows the activity. It has your compensated absences, your pension liability, your OPEB liability, and your bonds. Note 8 is just a general note on your property tax calendar. Note 9 starts the note to the retirement plan. This has a lot of what I would call, I guess, legal jargon in there, so we're required to talk about, but I'm going to hit the high points of it. On the first page there, it just shows the 3 tiers that are participating in the plan. On the middle of page 15, it shows your guys' proportionate share of the liability. So your guys' proportionate share of the pension liability for CERS is $717,084. The total liability for the entire program or the entire system is $7.033 billion. So you guys have a very small percentage, and it's really just a math thing. It's based on your proportionate share of your payrolls compared to the proportionate share of the payrolls for the entire fund. And that's your ratio. And so that's what your liabilities are. You have your deferred inflows and outflows related to the pension. You have differences in projected and actual experience, changes of assumptions by the actuary, differences between projected and actual earnings. And then you have your proportion differences and then library contributions subsequent to the measurement date. Some of those, you have numbers in both columns. You're probably thinking, why? Well, GASB makes us report them separately, so we can't combine them, even though you have, a deferred outflow in the first row there. You have a deferred outflow and a deferred inflow. We can't just, combine those together. So that's why you have ones in each. But these are amortized into your financial statements over between like 3 and 5 years, depending on what category they're in. So that way, anytime there's a change in assumption or something like that, there's not a large fluctuation either up or down in your financial statements because of that change. So it allows it to keep it kind of smooth. At the bottom of page 16, it shows what the fund is allocated towards, what different investments they have and what their projected rate of return is. I don't know if you remember, but that projected rate of return has really kind of went down over the last several years. I think they've gotten a better handle on what they can expect to get, because a couple of years ago it was around 6 from what I remember, and it's down in under 4 now. So on the next page, in the middle of the page there, we start talking about your OPEB, your other post-employment benefits. Your proportionate share of the OPEB liability for the state system is $171,448. The liability for the system as a whole is projected by the actuary to be $1,682,000 roughly. Same thing on the middle of the next, or the top of the next page, you have your deferred inflows and outflows. It's kind of the same explanation. It's just, we have to report them separately because it's for two separate things, but it's all part of the same fund. You have your allocation, which is exactly the same because it's all into one fund, so it's all allocated the same way. And then we just have a little bit more just kind of legal and accounting information we have to report there about your changes in the volatility if the discount rate was changed, how it would change what your actual liability is. Note 10 is just a general note on risk management. It just says you guys mitigate your risk through the use of insurance policies. Note 11 is a new note for this year. Because of the coronavirus, COVID-19, we've had to put this in basically every report we've issued since March 31st, pretty much. But basically, it just talks about the fact that the WHO declared the coronavirus a pandemic, and that you guys really changed your operations starting in March 17th up through June the 8th. You just went strictly drive-through. Most of the staff stayed at home. And then just talks about how you guys did it. It also has the last sentence there just talking about no one can really predict how this is going to affect the June 30, 2021 financial statements, but that we just kind of want everyone to be aware of it. I think at this point, since it's pretty much the only thing you see on the news, I think everyone's basically aware that COVID is going to affect 2021 as well. Note 12 is just a general note on subsequent events, and they were considered up through December the 15th, which is the date of the report. The next 2 pages is our report on internal controls. We have the same finding that we had last year, and we talked about this, I think, when we were there in person. It's the same thing. It's that you guys don't have anyone on your staff or a contractor that could write this report. The only part of what we went over so far in the 23 or 4 pages that was ours is the auditor's report. And then the last 2 pages, that letter. All the rest of that is your guys, and honestly, the pension stuff and all that's so very complicated to do that, you don't have anyone that you've hired to do it, and no one on staff can do it. And that's part of there's internal controls over financial reporting, and you guys are leaving that to us, which is fine, but that's what this point's talking about. It's saying that you guys don't have anyone who has the ability or the knowledge to write the report fully, the report and the notes. And that you guys have looked at it and it's not really cost effective to go out and hire someone to do that, because we're pretty much including it in what we're doing. If you hired someone to do that, it would probably cost you $1,500, $2,000, we might guess, if they're coming in from, there's a cat, coming in from the outside to do it. So it's really not cost effective. It's in the overwhelming majority of our libraries, just because that's the way they're set up. They don't really have something like that in place. A few of them have hired CPAs to do their books and stuff like that, so they could rely on those people to do it. But those are few and far between. So it's nothing that's really damaging. I mean, to be honest, I couldn't run a library, so we're kind of even on that part. The next page is your statement of revenues, expenditures, and changes in fund balance, budget to actual. So you have your original budget on the first column, you have your amended budget, and then your actual is the third column. And then we just have your variances there. There's nothing really outstanding that needs to be discussed. It's just one of these required reports. So it just shows your budget to actual. The next 6 pages are the items I talked about before about your the schedules related to OPEB and pension. The first one is related to your pension. It's your share of proportionate net schedule of proportionate share of net pension liability. This will eventually be a 10-year schedule. The pension, GASB 68 has not been around for 10 years yet, so we only go back to 2015. But it just shows what your proportionate share is in relation to the fund as a whole since GASB 68 has been in effect. You also have your schedule of pension contributions. which is on the next page. That's also will eventually be a 10-year schedule. We just don't have enough years. Well, we're getting close. 3 more years, we'll have 10 years. It'll be on there, but that's all that really, it's just informational type stuff. The next page is your schedule of changes in benefits and assumptions. When we were talking about the deferred inflows and outflows earlier, they're related to these changes in assumptions and that the actuary has each year when they look and do the audit for the states as a whole. And so this just lists the changes they've had throughout the time since 2015. There's nothing really big in there we need to talk about. The next page is your schedule of proportionate share for net OPEB liability. This only goes back to 2018 because GASB 75 only has been around that long. They kind of staggered them in so you wouldn't have to do it all at once, but it's kind of the same thing. It shows what your proportionate share is for that for all the years the statement's been in effect. We also have your schedule of contributions there. And so it'll be a 10-year schedule also. And then we have to duplicate this schedule of changes and benefits because it's based on OPEB, but it's really the same changes that were on the other page because it's in Kentucky anyway. Everything's in one fund as a whole. So they don't do an audit with the actuary, doesn't do one for pension and then do one for OPEB. It's just one big pile of money, I guess. That's all I have for the audit report. Does anybody have any questions? Try to hit the important parts.
So there is no discussion or questions? All right, well, thank you, Jared, for that report. Do we have a motion to acknowledge the audit for the 2019-20 year?
I make a motion.
All right, do we have a second? I'm sorry, I didn't hear that. Do we have a second?
Yeah, I'll second it.
Okay, thank you. I apologize. All those in favor say aye.
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 All right, thank you.
Well, thanks for
All right,
having
Melissa?
me.
Oh, thank you.
Melissa, we'll get in touch tomorrow about how many copies you need and that sort of stuff, just through email. We'll send you a PDF if that's okay.
That sounds good. Thank you.
All right, thanks. See you guys. Have a good night.
You too.
Thank you, you too.
All right, bye-bye.
Aye.
All right, Melissa, will we please start with the treasurer's report?
So we had a starting balance on October 31st of $1,361,146. Our income for November was $615,263. Our expenses for November were $151,470. It's much larger than normal because this includes our debt payment, which was a little over 100,000. And that left us with an ending balance on November 30th of $1,824,938.
Okay, do we have a motion to approve the November check register and financial report?
So moved.
All right, do we have a
I'll
second?
second it.
Thank you. All those in favor say aye.
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 Thank you. Let's move on to our librarian's report, please.
All right, so for statistics, one thing I'll point out is on page 2, we kind of revamped a little bit the way this looks. So instead of having a whole bunch of things listed separately, we've made one category for non-traditional items with everything listed under that. We did add crafting kits. Right now, those just include hot glue guns to kind of go along with our activity kit programs. Our stats were, let's see, total circulation stats were down 48%. Total patron count was down 67%. For programs, of course, we continued to do the activity kits, which have been very successful. Fran also did a series of author discussions for NaNoWriMo and a Day of the Dead program. For upcoming programs for next month. Again, we'll continue the activity kits, and Fran has planned another murder and mayhem program, so that's sure to be very interesting. For maintenance, Cintas replaced the duct detectors and mechanical rooms C and D, so that's all working again. The Kemple changed the air filters and did quarterly maintenance on our geothermal units. They found the air rings on HP2 and HP4 need to be replaced, and parts have been ordered. So that's, going to be costly. Professional activities. Kelly attended the Research Institute for Public Libraries. That was unfortunately had to be held online instead of her getting to go to Chicago. But that's been a good help to her. And then I've continued to attend the regional directors meetings and the CWC meetings. And Tanya has continued to attend the regional youth meetings. For Bookmobile, we've changed that to where it's currently a no contact porch drop service. So for all of our homebound patrons or her regular Bookmobile patrons, and even anyone else in the county who's unable to make it into the library to be able to borrow items, they can contact us, and actually Sandy will take the Bookmobile to their house, drop materials on their porch for them to be able to get after she leaves. So it's purely no contact. And she's returned also to setting up to provide Wi-Fi in various locations throughout the county. For grant updates, I am excited to announce that we were selected for the KDLA LSTA workforce grant. So that's going to provide 5 laptop hotspot kits for through September 30th of next year. And then that grant will be renewable for an additional year. I applied for the Libraries Transforming Communities Focus on Small and Rural Libraries Implementation Grant. So we can't say if we got this grant until ALA makes their official announcement. That's expected to be January 5th. But just to tell you a little bit about what this is going to entail. Part of it is I'll have to take a 4-hour, I think, online class on facilitating conversations. We'll need to host a conversation with community members as a part of the community engagement project. So in the application, my focus was to expand and improve on our non-traditional library collections based on what community input we get during this conversation. So the grant's going to provide $1,600 to purchase 3 hotspots with paid data for 1 year. And then an additional $1,400 to purchase additional items just based on the outcome of that conversation. I was, so for the Kathleen Arnold and David Arnold Foundation, I was contacted by Attorney Mark Watson, who represents the trustees for that foundation, for the library to be considered as a recipient of annual distributions. We're not sure right now what the exact amount will be or when we'll start getting that. But ballpark estimate was between $4,000 and $5,000 a year. The only restriction on that is that we spend it on tax exempt purchases, and we do an annual report on that. So we can spend it on programs, materials, capital projects, really anything as long as it's tax exempt. And that's it for my report.
All right, thank you. Do we have anything for the regional report?
So they just sent out the 2020 Kentucky Public Library calendar this month in lieu of the regional report.
Okay. Let's move on to our old business. Do we have an update on the sale of our Highway 27 property?
First, I want to thank you all for stopping in to the library to sign that resolution. The closing has been set for next Tuesday at 2. It'll be in Cindy's office up in Taylor Mill. After the closing cost, we'll get $93,900. I'll do another budget amendment to include this in January. I'll present that in January. But we might want to consider putting this money into a CD and then adding it to our construction capital debt fund is probably what I would propose with that, as long as that sounds reasonable to you all.
Okay. All right. Are we ready to move on to our new business with the policy review?
All right. So the first policy here is our circulation policy. So the first set of changes is under checkout limits. That's adding the board games, puzzles, and technology kits, and that's just according to our current practices. It also adds the line about laptops, hotspots, and laptop hotspot combination kits. So as a part of the grants and all of that. And then refers to a separate policy because there was just a lot more regarding those devices than really what would easily fit on the circulation policy. Under reserves, it's just adding the other items, board games, puzzles, and tech kits. Okay, so the other major change in this is notification of overdue items. So one thing that we've noticed is more often than not, patrons are returning their items, maybe late, but they're returning them before they actually get the postcard in the mail, which that's sent out when an item is 2 weeks overdue right now. So and it has caused some frustration for patrons, which then extends to staff because staff have to work with our patrons on that. So what we'd like to propose is that we do away with that first notice that's sent out at 2 to 3 weeks. And so then that would make the first notice be sent out when items are 6 weeks overdue. We'd still send the email reminding them that their items are due in 3 days. And then the second email, to move that, instead of saying reminding them when their items are 7 days overdue, to remind them when they're 14 days overdue. And then we'd still keep the overdue notice letter sent out at 9 to 10 weeks and still keep the bill sent out at 6 months. So that's it for the circulation policy. So then we would have the creation of the device circulation policy. So this is just to allow the lending of laptops, hotspots, and the combination kits. We recommend that they only be made available to adults to borrow. If a child needs access to it, we would hope that their parent would be able to check that out for them. Just because of the cost, the value of these items. We don't want a teen or a child to check them out and the parent not know and suddenly be billed and have the police come looking for a laptop that they knew nothing about. we would like to make it to where a patron must use their own library card. So when they would come to check out one of these, they would have to have photo ID to ensure that it is their library card. We kind of treat with books and other items, we kind of say, well, if somebody's given you their card, we assume you have permission to use their card. But again, just because of the value of these, we thought that might be better. And then it goes through, if an item is lost or stolen, it's possible that law enforcement will be involved. Patrons will be responsible for replacement costs of any damaged or lost or stolen devices. We would have a device usage agreement that they would have to sign off on every time that they wanted to check one out. Did stick with the standard loan period of 14 days. So that's a 2-week checkout. And they could renew it up to 3 times unless someone was waiting. We would only allow them to borrow 1 combination kit at a time, or in lieu of that, 1 standalone laptop and 1 standalone hotspot at the same time. So they couldn't check out more than 1 device other than that. They would have to return these items directly to library staff, be that at the library or on the bookmobile. They couldn't put them in the Dropbox. Let's see. And then for notifications, we treat these a little bit differently than our other items. So these would kind of have their own notification series. So at 14 days, we would send out a mailed overdue notice. And then if a device was 30 days overdue, we would at that time mark it as not returned, charge the replacement fees, and for the laptops, involve law enforcement on that to try and retrieve those back.
Now, do we have the ability? We have the ability to like shut off that hotspot once. Okay, I thought we discussed that before, and I just wanted to be clear.
Right.
Okay, that was my only question.
And same with the laptops. We'll have the ability to remotely disable those.
Okay.
And they'll also have absolute with LoJack. So they'll actually, we won't have to be involved with law enforcement. They'll handle that aspect of it.
Perfect.
And then I have a copy of what we have for the current laptop hotspot device usage agreement there. And that's, I mean, it's pretty standard. It's basically just making sure that they're aware of all of the ins and outs of how this works. Are there any questions or concerns with any of that, or my cat? I apologize.
Oh, that's okay. I don't have any questions.
Sounds good to me.
All right. Do we have a motion to accept the revisions of the circulation policy and the creation of the device circulation policy as presented?
I make a
I'll make the
motion.
motion.
Do we have a second?
Yeah, I'll second it.
Thank you. All those in favor say aye.
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 All right. Now we are ready for the budget amendment.
Okay. All right. So, sorry. Okay. So the proposed amendments here, this adds $3,469.70 to both the revenue and the expense sides. This is for the funds received for the KDLA LSTA Workforce Grant. So with this, the expenses will actually carry over into the next fiscal year. So while we'll put this on the revenue and expense side in this year's budget, anything that's remaining would need to carry over into the next budget. I just want to make you all aware of that it's not all going to be spent within this budget. It also adds $5,040 to expenses as discussed at our last meeting. So this is for the 5 laptops to make available to check out, and the 1-year subscriptions costs for those. This is only added on the expenses side, because they're covered with the existing reserve fund, so we don't need to make any changes on the revenue side for this. If these changes are approved, so that would make our final amended revenue $972,065. The final expenses would be $961,719. So that still leaves us with a little over $10,000 that's not really designated towards anything. So if we do end up having to make another amendment for DeBra Kemple, for the next set of repairs, we'll be able to pull from that. Any questions or concerns?
Sounds good.
All right. Do we have a motion to amend the budget as proposed?
I'll make a motion.
All right. Do I have a second?
I second.
All those in favor say aye.
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 All right. Thank you. Now on to our COVID-19 response.
All right. So technically, we are no longer required to be drive-through only, but it is still highly recommended as long as we remain in the red zone. We can also return to 50% of staff in the library at any one time. And my recommendation would be to do that as of January 2nd. Currently, we're set to return to in-person on January 4th. It's my recommendation to extend how long we're drive-through only. There's definitely staff concern about safety. We do have several staff who are immunocompromised or otherwise in high-risk categories. I know Brashear, I think it was last week maybe, had made the recommendation that schools stay virtual through January 11th if they're still in the red zone. I think a lot of us are very concerned about seeing another increase in cases, especially after Christmas and New Year's celebrations. So some options would be to stay drive-through only through January 11th and then reevaluate just depending upon where we're at. We could extend that all the way through January 21st, which would be the next board meeting.
That's what I think is best.
I agree. So, I mean, if that's acceptable to everyone, we would just need a motion stating that we would remain in drive-through through January 21st.
Does anybody,
I'm sorry, I totally lost vocals for a second. Was there a motion? Did someone make a motion?
I did.
Okay. Do we have a second?
I second.
I'll second it.
All right,
Okay.
thank you.
Either
All
one,
those-
it doesn't matter.
All those in favor say aye.
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 I apologize for my technical difficulties here.
You're all right, April. I don't think it was just you. I cut out for a second too.
Well, it makes me feel better. All right, now on to technical support.
All right. So I just found out today that LibSynergy, our technology company, is dissolving their business effective December 31st of this year. Yeah. So Carl is one of their current employees. I have worked with Carl with LibSynergy since we started working with LibSynergy. So we're talking over 10 years. He has decided to create his own company. So LibSynergy is a technology company that focuses solely on libraries. There's no other technology company, and at least in this area that I'm aware of, that does that. I will say that is a huge benefit. Before we had LibSynergy, we were with SNH, and while they were great, they didn't really understand the ins and outs of libraries and how what we need differs from other businesses. So Carl reached out to me about sending a contract for review to switch to his new company, Lib Services, once LibSynergy is dissolved at the end of the year. And as long cost wise, it's not something that we have to bid. Because we are under that well under that threshold. The threshold's like 30,000, and this is going to be closer to 12 or 13,000, somewhere ballpark in that area. So my recommendation would be just to transition to Carl's newly created company.
I agree.
Okay.
Okay.
Perfect.
All right, so are we okay with just a consensus? We don't have to do a motion as a formality. Okay. All
Right.
Perfect. All right. Well, I guess if there's nothing else, then we can move to our reminder that our next meeting will be held virtually on January 21st at 6:30. So we have that time now to adjourn. Do we have a motion to adjourn?
I'll make a motion.
All right. Do we have a second?
I'll second.
All right. All those in favor say aye.
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 All right. I want to thank everyone and wish you a very Merry Christmas and a Happy New Year in case I don't get to see any of you all out and about.
All right. Hopefully Santa Claus treats you all well.